Clients will come and they're looking to cover all of these different expenses that they have, from their mortgage to their children's education to retirement if one spouse dies. Now, when we look at life insurance, many planners will do what we call need-based planning, and they'll sit down and they'll go through all the needs-based, all these needs that you have to come up with the calculation of the amount of insurance. I actually like to look at it a little bit differently. I look at it from a perspective of what's the maximum amount of insurance company will offer you, because they will only offer you up to a specific amount. And if you're under 40, they will offer you 30 times your income. So why would they do that? Because that would bring in $3 million. That $3 million will make sure that your wife has that income, will make sure the kids are able to go to school, make sure that mortgage and those things are paid for. But if you say I want $4 or $5 million, they're not going to do that. It depends on your income. Okay, if you're making $150,000, again, 3 times your income, you might be $4.5 million. Now they would insure you for that. Okay, so it depends on the amount of income you make. Now let's come back to disability. It's almost the worst scenario because you get disabled and you've lost your income. Okay, so now if we're trying to insure against disability, and disability is covering the income if you're still, you're still alive, you just quit working. Okay, and so we need both. And a lot of times, in fact, if you're planning on a life insurance, we'll have a waiver of premium so that if you become disabled, you don't have to make that premium payment. Okay, that will just continue out there. And the disability policy will have a waiver of premium too, that when you're under disability, in other words, you're receiving disability payments, you're not making the premium on that. So waiver of premiums become very important.